Oxford metrics, everyone. So you put the name Oxford in there. Gives a bit of cachet, doesn't it? You know? So they came up with interim results. They are a little bit bigger than 100 million market cap, but they've got a tumbler of cash. This is a very interesting company, Oxford Metrics. Okay, they've gone from in fact 18 last week, 18 now. They had a big dip on their interim results. So what do they do? Smart sensing and software company that enables the interface between the real world and the virtual twin. And in fact, if you go on their website, I quite like going on their website because so if you see what they do, they as tech is used in a lot of sports, even movies. We live on the interface between physical and digital world. Is that where they live? I thought it was Oxford. So there we are. You see these motion sensors on them. These are for films, they're for sport, analytics, all that stuff. Smart sensing. So it's quite a nice company. I do like this. So let's look at the tail of the tape. Like I said, the reason why this is in the microcap league is because 106 is the share price. Target price 148, so 40% upside, they're saying. Market cap 138. Enterprise value 73. What? Yes. So even with that, though, the net asset value is 62. Average daily volume is decent, 200, quarter million. Revenue 44 million. Operating profit 4.8. Cash 65. 66 million. Now, the thing about this? Why got so much cash? Debt, tiny bit of debt. Operating cash flow 3.3, 3.6. Free cash flow 3.9. So free cash flow, yeah. So that's going to be earning interest on the cash flow. Now, if you look at this, these are half-year results, and so we see full-year results did really well. 54% top line, 94%. Now you can see straight away. Now, unless they have a bumper second half, I didn't read the results, but I mean, do they say it's weak to the second half? I don't know. You've got to be a little bit worried sometimes when that happens. Unless you check back and see, is second half weighted last time, or is it just the same that? But if it is second half weighted, last year and the year before, or whatever, fine, they can say that. But some companies say that, and they're not second half weighted. But anyway, 11% top line growth, operating profit down 34%, net profit down 17%, operating cash flow went up 478%. So we're looking at the value here. The PE is 25. Its price of sales is 3. EBITDA is not too bad because they've got a lot of cash, of course. I mean, let's look what they did. So let's look what the EBITDA is. So EBITDA is 4, and because you've got cash, decent amount of cash, then of course the EV is lower. Gross margins are like that. Operating margins, be nice. We've got gross margins that high. I like to think, and in fact, they've deteriorated a little bit from the first half. For the full year last year, they've gone down from 10 or 11 to just below 10. Return on capital employed, again, gone down a little bit. Broker forecast 39. So part of me thinks, why are you holding so much cash? At the moment, it's fine because they're probably earning 5% on it. But you think in a business, surely you should be allocating that capital and getting a better return than 5%. But you realize here the return on capital is around about 5%. So you want to up that. So it's an odd thing here. Come on, deploy it, buy a company, acquire something, do something. That's what you're not in business, just sit there with money in the bank because that interest rate is not going to be there forever. Hopefully, start coming down tomorrow or whatever. So I do like the company and all that stuff, but I'm thinking, okay, what just deploy the cash, do something with it, Anyway, what is it? OMG, yeah, man. It's a very, and I'm thinking, what's going on here? It's a very sort of, in fact, look at this. There we are. We've had this nice little rally from, again, 3 states of a chart. We're pretty much going, you can see here in an uptrend, and now we've got this hitting its head on here, turn back down. I would suggest there, if you want a decent company there trading, if you can get, will it come back down here? I don't know. But I'd say I'd put an alert to 80 pence or down here because if you are buying here, what's the dividend? They pay a dividend. They should be paying a dividend for that much cash. So look, yeah, 2.6, not a huge amount of dividend, but a good play here is that if it drops down here, unless they have a disastrous year. I mean, in fact, the half year wasn't that good compared to the full year. But you could put 20% on that, wouldn't you? I mean, I can't see it getting down to 72 pence, surely. I mean, that was the fall off after the big rally, then it came back down. But to be safe there, you think, well, that'd be a nice level to get into, and they'd be really undervalued. But I want to see him deploying that cash. I knew the CEO came in, it was a new CEO, I think, but I want to see him using that cash, to generate return on it, rather than just parked in a bank. I can do that. I can park my cash in a bank, pretty much. I haven't got 65 million quid's worth of it, mind, but there we are. But I do sort of like, I do like the company, what they do, but I think, come on, deploy the cash. Do something with it, that's your job. So, ladies and gentlemen, watch list or ignore for Oxford Metrics. Gareth, amazing hasn't been snapped up by someone for his cash file. Yeah, but you can do that when it starts coming down. I mean, obviously not the whole company, but you can certainly have a share of it. That's the whole thing. You should look at businesses like that. You see a lot of companies at the moment getting taken out by private equity companies. Why? Because they're looking in longer term, 2-3 years in the line, thinking this is cheap now. But if it comes down to that level where you think, 80 pence for that, what's the valuation on this company? Anyway, Rob, agree. Buy at 80. Mark V, watch this for me. David, yes, let's get it on the list. Okay, so OMG. Danielle, watch this. Market leading in one area from memory. Yeah, no, technology seems to be very good. They have contracts with some big, people there. Some impressive clients. I'm just thinking, they're gonna have to deploy that cash later. The interest rates are coming down. They're not gonna get that whatever they parked it with. So they're gonna deploy it. And that's it. If they don't deploy it, they're gonna get less return on that money. So you've got to make a decision sooner or later. Deploy the capital. Deploy the cash. It's a thumbs up, man.